Hello, and welcome to this short market and economic update. I'm going to discuss the recent market pullback and what's driving most investor concerns. Specifically, the market's fallen about 5% to start the second quarter after beginning the year with historically strong returns, primarily due to the changing expectations around inflation, the Federal Reserve, what they're up to, and what the rest of the year might uphold, as well as escalating geopolitical tensions in the Middle East. So I'm going to go over each of those topics and explain how investors can keep those in perspective. First, the recent attack by Iran on Israel resulted in a short-term market decline as investors worried about worsening and building tensions in the Middle East. While clearly the situation is still unfolding, the initial attack did not cause minimal damage, let's say. Israel and its allies had plenty of time to deploy countermeasures, and at this time, obviously we're hoping that both nations will show restraint and prevent any sort of all-out conflict. Without diminishing the severity of these regional conflicts, the loss of life, the destruction over the last few years, investors are still curious, how do these conflicts impact the global economy and their portfolios in particular. History shows that while there can be short-term market swings when these events occur, markets also tend to stabilize relatively quickly and fully recover typically within a year or so. Bigger events such as 9/11, the war in Ukraine, those can have longer-lasting consequences. Specifically with the war in Ukraine, there was a lot already unfolding before that invasion happened. So partly because of the invasion of Ukraine, but partly a lot of those other factors is why that one felt a little bit larger and lasted a little longer before markets were able to recover. So while these geopolitical events are important for many different reasons, it's critical to put them in perspective and see this data in the chart and try our best to not overreact when these events happen. The second reason the market has declined to start Q2 is that investors are worried inflation isn't going down as fast as expected. You can see in the data on this chart that prices, especially housing, are staying high, which means the Federal Reserve might not cut interest rates as much or as soon as they thought earlier this year. The good news is the economy is still doing really well, even with these higher interest rates. The Fed expects to cut rates this year, maybe slightly lower than some investors hoped. The last thing the Federal Reserve wants is to see inflation start to go back up. So our recommendation is to focus on the overall trend of rates, which as of now is trending higher. They've kind of come off of their highest mark, but if you zoom out a couple of years, the more you zoom out, the more you're going to see last couple of years, the trend is still higher. So don't get caught in this interest rates will go down eventually, so I'm going to go ahead and buy this or buy that and I'll refinance later, because nothing says that they have to. Finally, it's important to keep the recent market pullback in perspective. In general, the market experiences several major pullbacks each year. This chart here is one of my favorites as it shows the return for a given year in the blue bar, but shows how much of a market pullback occurred during that year. The ones that stick out to me are 2016, which had a completely reasonable 10% drawdown, but finished the year positive 12. 2003 saw a 14% drawdown, but the entire year was positive 29. So if you let that 14% drawdown rush you to the exits, you missed out on what would have ended up being a 43%, recovery through the rest of the year. So market pullbacks in that 5 to 12% range happen almost every single year. They're not a reason to alter your long-term investment strategy, and frankly, you should get really good at them because they happen so often. In addition to the 5% pullback that happened the first 2 weeks of this April, that comes after some really strong returns over the last 6 months. So it's completely reasonable to expect investors to take some profits off the table as we have done ourselves. So lastly, we hope, these topics were interesting. You found some of them insightful. We've just been scratching the surface on them. If you have any questions, reach out. If you would like to see a video on a specific topic, just comment below or send us a message and we'd be happy to do it. So hope you all have a great rest of your day and we'll talk to you all very soon.